Lagos, Lagos, good morning again. It's time for Business Express on Smooth 98.1, brought to you by the good folks at Stanbic IBTC. My guest today is economist at Stanbic IBTC, Ayomide Mejabi. Ayo, welcome back. It's good to see you again.
Thanks, Rotus. Nice to see you as well.
I think it's first time we're seeing this year.
Yes.
Yeah,
yes,
so Happy New Year in April.
Thanks to you.
All right, Lagos, remember you can join us, send your messages on WhatsApp 0809 444 0981. And also, send tweets as well at Smooth981 FM. Let's, as usual, hop into things. Market activity yesterday, all share index was up by 0.9%. 40,846 points is where it closed at. Year to date, we're up by 6.8%. Market cap is at 14.7 trillion naira. We had 27 gainers and 19 losers. Learn Africa was the top stock yesterday, closed up 9%, 9.4 to 1 naira 16 kobo. CNI leasing was down by 9.4%. That was the top loser, closed at 1 naira 35 kobo. We are still at 362 naira to the dollar. All right, so we also, we take questions. There was a tweet I saw. Somebody was asking for advice on investing 200,000 naira in the stock market. I mean, I don't want to put you on the spot with what stocks to buy with 200k, but what should this individual be looking out for before throwing any money in there?
I mean, thanks, Rotus. I think for us at Stanbic, it's really your investment horizon, risk appetite. What portion of your total income is 200,000? Is it all your savings, or is it a portion of your savings? So this, your listener needs to dimension his or her investment horizon. What age category person is? Does person have a family? Does he want to invest all the 200,000 on the stock market, or diversify a bit on the stock market, money market, some cash, maybe? In terms of the stock market, probably the best way to think about it is to think about sectors.
Okay.
And financials, manufacturing, consumer, oil and gas. That's and peak. The better names. Have an advisor as well. Stanbic IBTC also offers mutual funds, so that's a way to go in terms of taking a backseat and allowing a professional to manage those funds. But critical is to look at investment horizon, risk appetite before making any such decisions. Best case is to go through mutual funds. If that doesn't serve the user, then the listener can also think about sectors. What are the best banks? And remember that investing on the stock market is not a short-term play.
Right.
It's really a long-term, long-term play.
All right, good stuff. So again, contact Stanbic. They will give you the advice that you need as far as investing in the market. Let's talk about the Purchasing Managers Index, your PMI, for I believe the month of March.
Yes.
I'm showing this headline here. I believe it was on the Punch. It says private sector business conditions improved in March. Please take us through that. What you guys saw.
So as a background, so the PMI is really a fast and early indicator into what's going on in the economy. We know that Nigeria publishes GDP numbers, but those GDP numbers come out with some lag. So the PMIs are to plug that gap in terms of timing. And any reading above 50 is generally good, and any reading below 50 is not so great. So for the month of March, the PMI actually rose to its highest point in history since we've been gathering data in 2014 at 58.8 points from our 56 in February. And the main reason for that was increase in output. So many of the businesses we survey close to 500 businesses, which for Nigeria is a small sample, but to put in context, in China, which is a much bigger market, they survey about 350 businesses. So once you identify the right businesses, it's really a good tool. And many of those businesses suggested to us that because of the stable exchange rate, inflation coming lower, they are seeing more demand from their customers, and as a result, they also have to respond by increasing output. Now, what I would say to temper some of that optimism is that if we still expect a gradual recovery in the economy, so for this year, we still think growth will be around 2.5% to 3%, depending on the oil price and oil production. But clearly, the PMIs are pointing in the right direction. Also, from PMI is the inflation numbers. So the PMI has output prices, input prices, which help us proxy what inflation should be. And inflation numbers will be published some later this morning.
Yes.
So our expectation is that the inflation will continue to moderate. You still see a rise in inflation, in general prices, but that rise will be slowing down going forward, and that's quite good for the general business environment, the general consumer sentiment in the market. So long and short, the PMI is moving in the right direction, and we expect that to continue over the next couple of months.
All right, good stuff. So we're optimistic, but again, still oil and the exchange rate, we're still depending on those two.
Well, essentially. Essentially.
All right, let's come back to the stock market here. There's a headline that I saw. I think I got this from Nairametrics. Nigerian Stock Exchange may have adjusted the 1 kobo floor. Just real quick, the opening paragraph. The Nigerian Stock Exchange may have moved the 1 kobo floor if reports by the Nation newspaper are authentic. So the actual source here was the Nation newspaper, with the price floor, of course, being the minimum amount at which a stock can be allowed to trade. I mean, to help us out, what happened here? Or did they move it, or what's
Sure. So the background here is that the price floor for many years was 50 kobo.
Yes.
Which meant that all stocks couldn't go below 50 kobo. The stock exchange moved to take that away in order to improve price discovery. If you don't think the price should be at 50 kobo, why should it be there? So that was taken, as the article suggests, to 1 kobo early last year, and has remained like that since. What's happened recently, and I suspect that's what the Nation is referring to, was really a technical glitch on the stock market. So I suspect what happened was many stocks didn't actually go below close to the 1 kobo floor. When some attempted to approach that floor, there was a software glitch, and so for temporarily the NSE has communicated to the broker dealers that they can keep a floor of 20 kobo. But this doesn't, in our view, doesn't suggest that it's a dramatic change or a fundamental change to how the NSE is thinking. There are also been some other change in terms of price movement. So, for instance, if a stock is 100 naira and above, it can move. It needs 10,000 units of the stock to move the price, and can move 10 kobo. And same thing if the stock is 5 naira to 100 naira, it needs 50,000 units to move, and it can also move 5 kobo. So the NSE continues to work every month and weeks to improve price discovery in the market. I think it's a good thing. I think what's happening here is just technical glitches. Shouldn't as soon as they get the guys from IT to come and sort it out, should be fine.
Excellent stuff. Okay, message here from Victoria. Again, you guys can send your messages 0809 444 0981. Victoria asks, are most of our stocks largely penny stocks? Most are low single digits, just asking. I guess in dollar terms, you would say most of our stocks are penny stocks. Yeah.
So when you look at Nigeria in the context of global emerging markets, so in dollar terms essentially, so we still have, both from the amount of float and amount of transactions we have in the market, Nigeria now trades, on a good day on an average day we do $10 million, which is still a small portion of our GDP. So Victoria is right in the sense that compared to global norms, then many of the stocks are still small. However, when you think in the context of sub-Saharan Africa, Nigeria has one of the largest stock markets. So you think of Nigeria, the only other larger ones are South Africa and probably Egypt. So Nigeria is still, a giant of Africa.
But globally, yeah. Okay, good stuff. Victoria, thank you for your message. Okay, so let's move to this here. This headline here from it says here, I think it's on Nairametrics too. This is the highest lending rate seen in 12 years. They were looking at CBN data, which shows that the maximum lending rate is now 31.4%, highest they've seen in since 2006. Can you speak a little bit on that, on what they're...
So what happens, what the CBN publishes highest lending rate, prime lending rate, and lowest lending rate. So what it does, it has a survey, the banks have to provide this data. And just to give practical example, when I walk into a bank as a retail customer, so which is Ayomide Major B Incorporated, no credit history, minimal credit history, I'm more likely to get the higher lending rate compared to a corporate who is on the stock market, for instance. They will tend to get around the prime lending rate. So the article is right in the sense that the maximum lending rate is the highest it has been in history. But I suspect most borrowers in the market actually get funds around the prime lending rate, which
Okay.
is still marginally lower than what it has been in history. I think it's about 17.5% at the moment. So it's interest rates are still high in Nigeria, and the article goes on to talk about the NPR and the central bank keeping the NPR at 14, and that's why the lending rate is high. I actually think that fundamentally Nigeria is still a high interest rate environment. There's still structural challenges that we have. Power is still epileptic. Route to market is still a challenge. So, transport infrastructure, logistics is still a challenge. So until those structural challenges are fixed, you won't really move to a lower interest rate environment. And the central bank has other tools to adjust monetary policy. So everyone looks at the 14% monetary policy rate. However, arguably, I think the central bank has actually eased policy slightly since December. So it uses open market operations, liquidity management, and those rates have come lower. They were mopping up liquidity in end of November around 18%. Now they're mopping up around 14%. So they've effectively eased policy. So I always argue that there's the link between, or the transmission between the monetary policy rate and the real economy is quite weak. Not only in Nigeria, but in sub-Saharan Africa generally.
Good stuff. In fact, that really is all the time that we have for those particular stories. I wanted to get your take on what foreign investors, how they feel about the upcoming elections. But maybe, elections are still a year away, so hopefully we'll have you back in the studio hopefully next time to discuss that.
Sure. What I would say though is that foreign investors tend to be concerned when they think that you're going to have a coup in the country. So they still view Nigeria as one of the more mature democracies in Africa. I was listening to your show, and the stock market went
down when Buhari made his announcement.
Contrary, the foreign investors actually saw it as potentially continuity. At least they understand, they know that he's going to run. So now the question is who's going to be the main opposition. But we can take this up some other time.
Ayomide Mejabi, economist at Stanbic IBTC. The show is brought to you by Stanbic. Thank you so much for joining us again. Good to see you, sir. Appreciate your messages on WhatsApp. That's BusinessExpress now. We'll be right back at 7 o'clock with Frankly Speaking with Muiwa Afolabi. Keep it locked to Smooth 98.1. I don't know why I keep thinking